Hello, I'm Christian Diebitsch. I manage the Heptagon European Focus Equity Fund, and here are my comments for October. The recent rate hike in the UK has not dramatically impacted the fund. In fact, we only have one stock in European focus, which is British, and that is Diageo. And also, when you look at the rate hike, the immediate reaction was that the pound actually went lower, which should technically be good news for Diageo because it's a big UK exporter, so they effectively import stronger currencies. So the earnings growth looks higher. October was a decent month for the fund. It was a very good month for Europe as a whole. The fund was up by 2%. The European markets were up by 5.8%, so it was still an underperformance of 3.8 percentage points. Energy topped the leaderboard. It advanced by 11%, followed by industrials that were up by 10%. And then if you look at number 3 and number 4 slots were IT and financials, and they were up by something like 7 to 8%. For the rest of the year, I think we are probably now at the bottom of the market. I think we'll trade in a volatile fashion. I don't think much is going to happen. I think people just generally want to get 2022 over and done with. The irony of the whole thing, when you look at how the performance has been from the beginning of the year until the end of October, is that Europe is down by roughly 12%. There's only one sector that's done well, and that's energy. That's up by 34%. And the second and the third best performing sectors are healthcare and consumer staples, but they are down by something like 6 to 8% each. So only one sector this year has made money, and that's the reason why European focus has been lagging. The good thing you can say about October is that we sort of passed the third quarter end. October really is a month when a lot of companies deliver interim results, and that's been actually quite good news because it has essentially forced equity investors to look at something else than macro. We had a very busy month. The European Focus Equity Fund had 12 out of 22 companies reporting figures, and on the whole they've been quite good. Companies, they actually give a pretty uniform message now. Basically, we try to look for businesses where you see acceleration in terms of growth. Now, acceleration in terms of growth can come from two sources. Either companies just grow inherently very quickly, like the biggest position in the fund, it's Novo Nordisk, the Danish insulin company, or they can grow or visibly grow because their base numbers for comparison are low. So when you look at the growth rates for these companies that have reported figures, they're really all over the place. But what you can say is that on balance, most companies are now seeing slower growth. So everyone is being impacted by the weaker economic environment. That's the bad side of the coin. The good side of the coin is that when you listen to them, not many of them are actually downgraded. They're just in a status quo. They're fairly non-committal for 2023, but you don't get the impression that things are necessarily getting any worse or necessarily getting much better. So we just have to wait and see. On a more positive note is that the higher input costs, so for example raw materials and components, transportation, those type of costs, they've either started falling or they have actually flattened out. So the only real cost pressure that we see in our companies is that wages are going to go up for 2023. The key here really is, even for us Europeans, that we are in the hands of the US Federal Reserve. And the Fed, they have quite clearly stated that they want to bring inflation down to 2%, which is their target, and they want to bring inflation expectations down as well. And that's a little bit more, shall we say, more soft issue, but it's very important because it affects households' behavior in terms of how they spend money. It also affects companies, how they invest. The good news is that if you look at the US yield curve, you can see that peak rates have moved from 3 years to 2 years, and that now at around 1 year peaks. And that implies that we are coming closer to the end of the tunnel, so to say. That should be good news, but it's probably more a story for 2023. I think once the narrative of the Fed changes, that means that energy and energy stocks is not going to be the only game in town, and that means that other businesses like those we have in European focus will really perform quite well. Thank you so much for listening in. If you have any comments or any questions, please contact Heptagon Capital.